Hello, ladies and gentlemen. Good day and welcome to the show. Today is October 5th, 2020, and glad to have you guys here. Now, let's get started. I want to talk about Trump. Trump's in the hospital right now. At least he's still in the hospital. They're talking about letting him out today. But the common flu, coronavirus, they both run about a similar length of course. That's how long they take for you to initially catch them and for them to work their way through your system and for them to leave. And a lot of people, it's about 7 to 10 days. Some people, it's about 7 to 14 days. But it's a serious infection is what it is the flu and the coronavirus. And it has to run a certain course. Now, Trump hasn't had it very long. But we notice what medications they're giving him. Very specifically. Two of the medications that they've been giving Trump, now, they're only going to give him the medications they think actually work. And two of the medications they've been giving Trump is zinc and vitamin D. And these are medications that you guys can get out there at probably any Walgreens store or any Walmart store, or these stores carry these two medications, and they're over the counter. You can buy them. You don't need a prescription or anything. There's little or no side effects to these medications. But vitamin D and zinc, these two medications, you have to read carefully on the bottle and take the prescribed doses recommended. You just can't take a whole bottle of it thinking it's going to save you from coronavirus. It's a helper. It will help probably lessen your infection to a certain degree. And, they're not real expensive medications either. Easily obtainable for everyone out there. So this is something to think about, Anyway, let's move in. Let's get the chart started right here and take a look at the markets today. First thing we're going to take a look at is the silver price. $24.34 today. It's up 65 cents on the day. Took a nice little price increase there. And it looks like it's holding fairly stable at this new price. That's a nice jump in price, 65 cents in one day. Okay, let's take a look at gold. Gold today is up to $1,914. It's up $15.20. And it looks like it's stabilized at this new higher level, up above $1,900. This, for gold and silver, we've went through the correction phase now. A lot of people were expecting that correction. That's healthy in the market, and it held support. Like gold held support above 1,800 and silver held support above the $20 range, And this was key, very important, that they held support. They didn't go below support levels. And now they're on their way up again. They're starting to move up again, So that correction didn't last real long. I hope a lot of people out there probably took advantage of that, to get a little bit of more silver or a little bit more gold during the correction phase. Okay, let's take a look at cryptocurrencies today. $343.1 billion with a Bitcoin dominance of 57.8%. And we're looking at a Bitcoin price of $10,722. Bitcoin has been an awful stable asset over the last few months, with its price not fluctuating that much. Very little volatility, keeping a steady price of probably between around 10,300 and 11,000. And right today it's 10,722. It's very stable. That was one of the biggest things they said about Bitcoin for years was that it's so unstable. Like you buy it one day at $800 and the next day it's down to $400. Those were back in those days when Bitcoin was $800. You see, the stability comes with price. As this price gets higher and higher, you're going to see more and more stability and a safe place to hold your money. And that's what I think's happening. I think stability is going to come at higher and higher prices for cryptocurrency. That's where the stability is going to come. Dow Jones Industrial Average today is up 370 points. Now, this is not stability. This thing going up 300 and 400 one day and 300 the next day when it's already oversold, this is a bubble. This is a bubble, You heard a lot of talk about Bitcoin, the cryptocurrencies, as being nothing more than tulip mania. This right here is tulip mania, but it's also showing signs of the oncoming hyperinflation, because as the hyperinflation hits, there's no end to how high the Dow can go in hyperinflating dollars, And so this might already be early signs of that, the fact that this Dow keeps going up and up and up. Might be a sign that we are on the edge of the hyperinflation getting ready to start, or entering into the acceleration phase. What's called the acceleration phase is the pre-phase that occurs just before the actual hyperinflation comes. It's called the acceleration phase, when we start to enter into high 1970s style inflation that they can't control. That's called the acceleration phase. Okay, taking a look at oil today. It's up $2.56. You see how they're trying to keep it around $40, $39.61. It was starting to dip down there. It was down around, $37.60, And all of a sudden it's went up to 39. They're trying to keep it at $40. That's what they're trying to do. So many people aren't driving as much, in the world. Less consumption of oil. But the United States has already cut back on their output. An awful lot of wells in the United States, because of shale oil, it has a high cost per barrel to get it out of the ground, It costs almost as much to get the shale oil out of the ground as the price is right now. And so the United States oil production has been dropping off a cliff. And this means not so much oil into the world's supply. And anyway, let's move on to bonds and rates today. We are seeing movement in the bonds today. And this is why I'm showing the bonds here. We're seeing bonds starting to climb. We're looking at the 10-year back up to 0.75. It was down around 0.5, and now it's 0.75. We're seeing a movement here. And the 30-year, 1.559. It's up almost 8 basis points today. How long is the Fed going to let that happen? I don't think so. I think they're going to step in on this, because this is more important than anything. And this is actually, to the Fed, is more important than the stock market. And we're seeing these bond yields, the price crashing on bond yields right now. They're going to step in. They're not going to allow this to go too much further. And what that means is, it means yield curve control. They're going to have to initiate yield curve control if these move too much further. Okay, you got it here first. Yield curve control is coming if these bond yields on the long end start to move too far. They start to go up too far. And who's going to buy this garbage? You're getting a negative rate of return when you factor in inflation. So there's only one buyer, going to be the Fed. And they're going to have to step in and start buying these. And what that means is they can call it by anything they want to call it. It's still yield curve control. Okay, let's take a look at the U.S. dollar index today. 93.47. We're looking at the dollar slowly sliding down a little bit all day today. And we see silver moving up a little bit, Let's take a look at our funny picture today. Honest to gosh, their legs really get me, It looks like they're wearing stockings or something, or pantaloons or something. It's really something, They're funny looking, those vultures. We used to have vultures. When I lived down in Florida, we had vultures. They're awful good flyers. They put their wings out and they can catch the air currents. And they catch uprising air currents, and they can stay in the air without even flapping their wings for the longest period of time. Thank you guys for listening to my show. Like and subscribe. Give me a thumbs up, and we'll catch you guys in the next episode. Bye-bye.